G'day, Tex here with you. And today I'm going to answer the most asked question that we get, and one that could completely revolutionize the way that you trade is, of course, what type of trader am I, and how can I utilize that trader type to maximize profits? It's such an important question. And this guide could really change the outcome of your trading future if you digest what's written in the guide and really think about it. It's not so much the content of the guide, but it's the question that it will have you asking from reading this and going through. And I'll show you through some trader types and a few trader strategies for each of those types. You can go to unitydtradinggroup.com/trader type, where you can get access to this guide. Huge. There's of all the one-on-one trading mentor sessions that we've done in the past, the same question is asked, and when you deconstruct what it is that you're doing now as opposed to what you want to be doing with your lifestyle around trading and letting your lifestyle dictating your trading and not letting your trading dictate your lifestyle, this is an absolute game changer for people. So I'm really excited to share this with you, and I hope you get some value out of this session. So without further ado, let's kick on into it. There's four main trader types that you may be, and if you want to get a trading sheets here, there's a whole bunch of this stuff on this guide. Just punch in your email address and you'll get a bunch of trading cheat sheets, by the way. So there's a number of trader types, but there's really four main trader types. And you can see on the screen here, one is the scalper, very short-term trades, the swing trader, which is myself and ads and a number of guys now after we've shown them the way or the light, the day trader and the position trader. Now, one thing I will say is cherry pick everything out of this guide and apply it to what you believe is best for yourself. This is not the be all end all. And just because I'm biased as a swing trader, that doesn't mean you have to be a swing trader, but certainly take from this and apply it to your own strategy. And what I will say from this as well is don't jump between strategies because it's the flavor of the month. Look at this guide, identify what type of trader you might be and master that trader type and take influence from all the trader types and apply it to what you believe will work best for you. Don't jump from trader type to trader type because it will mess with your head and it'll mess with your profits. So number one, the scalper. So the scalper is someone who will take 10, 15, 20, maybe 30 trades a day, and it will stick to maybe the 5, 10, 15-minute trader time frame and will seek 0.5%, 2%, maybe 3% movements multiple times a day throughout their trading time. It's an okay strategy. A lot of people that come to us think that trading in or trading on the small time frames and being a scalper and being able to take more trades throughout the course of the day is the most profitable way to trade. And while there might be some truth to that, you've got to look at the secondary and carry on effects that come with trading and being in front of the screen so often. If you've got a family, if you've got a demanding job, if you've got a busy lifestyle, scalping is certainly not for you. So don't believe that just because there's more trades taken in a certain time frame that becomes more profitable. The biggest thing with this is that you need to be able to trade with very little emotional bias. When you see a 5-minute candle that looks like an entire screen, but really when you zoom out, it's only a 0.5% or 1% move, you mentally need to be able to battle with that when you're seeing fluctuations in a candle very rapidly, especially in these volatile moments of the day, the daily open, the daily close, weekly open, weekly close sort of thing. So for this, there is simplicity in this. You really only need support, resistance, RSI, maybe a volume profile if you're working with a pro trading view subscription. But the biggest thing, you really need to conquer greed and you need to conquer your emotions when it comes to scalping. So potentially quick gains with the right coins only requires basic TA, a constant mental battle. You got to be in front of the screen quite a fair bit, and it can lead to burnout. And I can attest to that. When I was scalping as a little bit of an experiment, I did that for a few weeks. I was burnt out big time. And it created a little bit of a negative connotation towards trading when I was winning, I was losing, but being in front of the screens all the time. The swing trader, that's myself, that's ads, my PIC, and a lot of guys inside of the Discord, because of course I'm a little bit biased here, but this really is a trader's dream, the swing trader. You're working, maybe looking for entries on the 1 hour, working primarily on the 4 hour and the 1 day time frame. And what it does is that it allows you to set up trades and let them come to you. And I'm just going to open up another guide that I'm going to share with you, which is our supply and demand, unitydtradinggroup.com/supply and AND demand. And the beauty of this is that, as I said, you spend the time looking for the right trade setup, you set your buys, you set your sells, you set your take profits, and you walk away. If your take profits get hit, great. You move your stop loss up and you enjoy the ride. You enjoy the free money that comes from that. If you get stopped out, no problems. You've stuck to your guns. You can journal it and you can identify where it is that you went wrong. You're taking less quantity trades, but far higher quality trades. And the beauty of being able to buy off supply and sell at demand is a luxury that doesn't really owe itself to a number of the other trader types. This could be 4 hourly, 1 day, 1 week candles. You are looking for the perfect setup based on previous history for a buy off demand, and you are selling at a predefined level or a supply with take profit levels scattered throughout the course of that. It is a luxury. It is a luxury to be able to trade like this and to be able to identify a good entry and a good exit. Check your charts a couple of times a day and walk away and enjoy the potential profits. So in doing this, you set yourself up for real, true, and financial freedom. Well, not so much financial freedom. Maybe that is a little bit of a stretch, but you can have the trade work for you rather than working for the trade. And I think that's a pretty good definition of financial or trading freedom. So suitable for those with full-time or parent duties. If you've got a demanding lifestyle or parenting lifestyle, to be able to set up a trade and walk away is a gift. Far less time in front of the screen. You might take 2 or 3 or 3 to 10 high quality trades a month, and that's a couple of hours screen time. Sounds pretty good to me. Removes the need to check trading view 20 times a day. That's certainly very true. When you're in a daily position or a scalping position, how many times are you checking trading view? What a mind F that becomes. Creates a stress-free trading environment. Set and forget, baby. That is awesome. So it's difficult to get over that I need to be in a trade 24/7 mentality. Everyone thinks you need to be in a trade. You need to revenge trade if you missed a trade. If something runs, you better FOMO into it. This eliminates a lot of that. So it can be hard to adjust to not checking trading view 20 times a day. That's definitely true. So for the day trader, you'd normally chart first thing in the morning or the previous night to find entries and possible targets to reach towards the ends of the day. So what you might do is you might generate a trade at, being here in Australia, the daily close on crypto is around, I believe, 10:30. I'm here in Melbourne. So what you might do is you might set up a trade the night before looking for a pullback and a potential entry. You would trade the volatility of the morning session for us up towards the daily close, where you'll often see a bit of volatility, and then maybe you might chill and then you would look for positions towards the US Open or the Asia Open, the London Open, where again you see a little bit more volatility. So it's pretty good to do that. For FX, obviously you would close your positions at the end of the day to avoid paying excess fees at night, and when the market closes and when the market opens, you would expect to see more volatility where you would be in front of the screen. So again, it's less time in front of the screen. It does take a little bit of inspiration from swing trading. Again, you would be using things like supply and demand to do that, or Fibonacci for potential retracements, MAs. The cons is it's not ideal for beginner traders. That emotional element comes into play when you're dealing with high volatile timeframes. Again, it's easier to stick to a structured trading schedule, but on the flip side of that, if you have to be in front of the screen at 9 to 10:30 on a daily time frame, it can make it a little bit limited if you've got a job or you've got to drop kids off at the school or other things like that. The position trader. So the position trader, again, takes a little bit of inspiration from swing trading in the sense that you will be buying off demand, selling at supply. However, you will be looking at days and days of holding positions, or potentially weeks or months of holding positions. So, if you don't have the time or the desire to trade on a daily basis, a position may last weeks. You may look at a position trading as almost like an investment trader mindset. I might sit on LTC now and I'll check it in a week or two, and I'll see what profits or losses I may have made in that particular time frame. I might have bought Tesla a year ago and I'm still holding it. So the basics will work here: supply and demand, Fibonacci extensions. A lot of these will take those same sorts of tools, fibs, and at the top of the screen, and as we continue downwards, all of our guides and videos towards using these types of trading can be found here at unitytradinggroup.com, or come into the Discord and ask us. So How about some trading strategies to go with those trader types? They are the four most common trader types. And if you want to learn about each more of these, and I would encourage you to Google it or again, come in and ask us. But we're trying to keep this simplified to give you an overview of what it is and then encourage you to think about what you might want to take from that or what type of trader you may want to be from that. So let's get into it. Trading strategies that will apply to each of these trader types: trend trading, breakout trading, range, momentum, reversal, and retracement trading. We're going to be looking at BTC as an example for this. But what you may like to do is, again, cherry pick what would work best from these strategies, apply it to what you believe may work to you as a trader type, and build upon it from there. You must have a strategy. You must have a plan in place before you trade in order to maximize any sorts of potential profits. So trend trading is pretty easy, and trend trading is great for swing trading and position trading, because what you are looking for is one of two things. Are we in a bullish trend? Are we in a bearish trend? Are we going up? Are we going down? So it involves identifying an upward or downward trend and choosing a trade entry or exit based on the position of the asset or the coin's price within that trend and the relative strength. As I said, excuse my dog. In short, is the trend bullish or bearish? So you may have heard the phrase, the trend is your friend. It's a very handy phrase, because using nothing more than a few indicators, it gives you a lot of power on gauging whether long-term or short-term, mid-term, we're going up or we're going down. So what indicators would you want to use for this type of trading? A moving average being our unicorn indicator or any type of EMA. Steamroller, of course, RSI, Ichimoku, and volume. For me, the two most important ones are the moving average and Ichimoku, because they really do give you a powerful, and steamroller, of course, gives you a powerful indication of how a trend is moving. So if we look at something like Unicorn, we're looking at a 10 and 20 moving average. And what this will do on the daily time frame is give you an indication of whether the 10 and 20 MAs have crossed, because they're shorter time frame averages. They're giving you a little bit more immediate data than something like a 150 or 200 moving average, which is giving you much longer time frame averages. So in essence, are we trading above these MAs? What I'll do is I'll turn this off. Are we trading above our MAs to give us more short-term trading bullish data, or are we trading below it to give us more short-term bearish trading data? And you can go to moving averages. Just type in Unity Trading Group moving averages for a real breakdown of how to use these in your trading. So again, you can take it a little bit further if you want much longer-term trading data. 50, 100, and 200, 150 MAs. In short, are we trading above the MA cluster to give us a bullish environment, or are we trading below the MA cluster to give us a bearish environment? And using that along with Unicorn will give you more immediate data for short term. Yes, we are short term bullish. All right, now we are more long term bullish, and away we go. So a secondary to that as well is that you can use your Ichimoku, or in my case, Unimoku, which is our custom Ichimoku indicator, to identify whether we are in a bullish scenario. TK cross trending above the Kumo, Chico above the cloud. Again, you can go to unitytradinggroup.com, Ichimoku, or you can just look at Unimoku here, and it'll give you a full breakdown of how to trade with the Ichimoku indicator. So that's trend trading. Are we in a bullish environment? Are we in a bearish environment? Very, very simple. Next, breakout trading. I do like breakout trading because it can be immediately profitable in terms of identifying a range and whether we have broken out of a range. One unfortunate thing about breakout trading is that you've got to be in front of the screen. Yes, you can set alerts and then go and sit in front of your computer, but what if you're enjoying a birthday or time with the kids and you're getting alerts saying, hey, we're breaking out of a range? When you're in front of the screens, it can definitely work. And it's very simple. All you really need is trend lines, support resistance, RSI, and steamroller for that. But you can also take some inspiration from trend trading. If we know that we're in a bullish environment and we're breaking out of a range, then we very well may be on our way to securing some profits. And the same thing can be said for bearish scenarios as well. So let's have a look at a breakout trade. Here's one immediately here as well. So what we might look for is, have we been in either a consolidation period? Have we seen a resistance support flip area hold? We've got a resistance now turned support. That would maybe be our first little bit of an idea. And then what we are doing, and this is on the daily time frame, mind you, we've been rejected here, rejected here. We didn't necessarily have what we would often see on a breakout trade is that we may see what's called a breakout. And if you went down to the smaller timeframes, you would likely see this, and we will have a quick look. You would expect a breakout from a range. So using your trend lines, whether it be support, resistance, and your trend lines, you look for what's called a breakout and retest of our diagonal trend line before the continuation of the trend, being in this case a bullish trend. So if we have a quick look here on the 4 hour, we would say, and look at, and that's beautiful. So what we would say is, you can do this a number of different ways. Let's use that as an example. So we've got a breakout from this region. We've now come back and retested this diagonal, had a very small consolidation, and then we've continued our uptrend. We've had a little bit of a range here, and then broken out of that range and continued up. So for that, that's a pretty cool thing. If you can catch that break, that's great. But what a lot of breakout traders will do is they will wait for the break and the retest of the diagonal and then head back up. The thing about diagonal trend lines is that they are a little bit subjective. So I might draw mine a little bit differently if I'm using something like the blue lines, or I'm using lines. Maybe I'm using Heiken-Ashi, maybe I'm using standard trend lines. So it's always going to be a little bit subjective, and that's where using something like supply and demand takes the subjectiveness out of it and gives you predefined set levels. So to accompany that, you might use something like steamroller, which gives you, all right, we've got a support resistance support flip here. We've got our, looks like we've got a little bit of divergence there as well, bullish divergence. Steamroller is telling us that we are looking for an oversold condition here, and that this consolidation may be the range where we're, looks like, potentially accumulating before the next sort of move up. So that's pretty cool. That's pretty cool on breakout trading. There's pros and cons to that for sure. Range trading. So range trading is pretty simple. This would probably more apply to maybe a scalper or a day trader, where you're looking for a predefined range where we are trending within that particular range. And rather than doing it with my hands, I'll just show you. This would be a lot easier. So what we would do is, if I was a scalper, or I was working on a small time frame, I'm looking for a trading range that is respected a number of times before a breakout. So what I would do is, maybe I would be trading this range all day. So what I'm doing is I'm looking for these predefined swings. This is a 1.5% swing. And whether I'm looking for wicks to the downside, or I'm looking to use bodies, or you could certainly just use the line to take all that subjectiveness out of it, I'm looking for these types of trades. I'm looking for this range to be respected before a breakout occurs, and then that's where I may switch to the higher time frames and then start looking for levels of supply and demand to the upside by going out to my daily time frame, looking at something like Unicon. Am I in a bullish scenario? Has Unicon given me the uptick? Yep. So we've got, and this is, I'm just winging this, by the way, so you can see how this aligns quite well. We've got Unicon telling us that yes, we now have an MA cross. We've broken out of this trading range. We've had a small consolidation, and then we've continued up. Steamroller has also given us back here, telling us that we should start to pay attention on the smaller time frames. You've got to take away the emotional bias of seeing our oscillators oversold, because when things start running, particularly on the smaller time frames, that's where these things will become secondary, and you'll be relying more on price action, candle closes, and relative data to the left. So that's breakout trading. Very simple. You would just use your trend lines. You would use steamroller. You would maybe be looking for breaks of particular trends, whether your trends are respected on the way up. Yes, they certainly are. So that's pretty cool for range trading. I do enjoy a good range trade. So momentum trading is very similar to trend trading, although generally we're looking for reversals of strength or trends to take a position. So for example, if a downtrend is losing momentum, it could indicate time to take a position, and vice versa in an uptrend. And this is where steamroller shines, because it tells us oversold or overbought conditions. It tells us when a trend is coming to the end of its run, and that we may be considering entries based on the discontinuation of that bullish or bearish sort of macro environment. So for here, what we're looking for, yes, you can see it on the smaller time frames, but if we're building a narrative, as our friend Crypto says, we are looking for the end of a run. Again, as I said, this is where Steamroller shines. This tells us that we have met our top right here. We then have Unicorn giving us a secondary confirmation that, yes, it may be time to exit this position. This is on the daily time frame, mind you. And then we've had a pretty drastic sell-off from here to this point. We've got Steamroller telling us just here that the trend has come to an end. Why? Because it's telling us in this area here that we are, this red bar indicates seller exhaustion. It indicates that we're coming to the end of a trend. And what you may like to do is you may like to wait for an MA confirmation. You may like to look to the left-hand side to see if there is previous data of where an area has been supported. So if we look to the side there, if you're a support and resistance kind of trader, you may look to something like this. You may look to see where prices wick down to. You know that we've had the sort of this pretty aggressive buy-up. This is where you would maybe go to the 4-hour time frame, looking at here to know that we've had this resistance support flip, and that may be a good area to purchase into. We've got Steamroller, we've got MACD, we've got our Unicorn indicator telling us that it's coming to an end, and that selling pressure is diminishing. We then also look at things like volume. Is our volume starting to increase? Are we seeing less red candles and more green candles? In this case, we certainly were. We saw a big volume injection in this daily candle, and then increasing buying pressure based off of this big wick and huge dump to the downside. So that's pretty cool. When we're looking for momentum, we're looking for strength in momentum. Again, if you're using something like Unicorn and you're looking for the difference between the two MAs, or using something like the MACD, for example, you're looking for divergence or separation between our MACD and our signal line, or our histogram is telling us the difference between, or the space between those, indicating a little bit of buying strength there as well. So that's pretty cool. All right. Reversal trading. Reversal trading is when traders look to anticipate a reversal in a trend with the aim to guarantee an ideal time to enter the market. So this is considered more difficult and risky, as true reversals can be difficult to spot, but they're more rewarding if they are correctly predicted. So this type of trading suits day traders and swing traders, requires concentration and planning ahead of time. It can sometimes be very quick trades to execute. So what we're doing is we're looking for reversals. As I showed you beforehand, you would maybe be looking at this level here where we had a support resistance flip. You may be looking for areas of supply and demand where we're looking for potential reversals. What I'll do, because it's a little bit more of a difficult technique, I probably won't dive into it here because it is hard to pick reversals, and I would probably stay away from it, to be honest. You know, when you're looking for reversals, especially aggressive reversals of high selling pressure, sometimes we call that knife catching. That means you're trying to catch sharp objects, and you're going to get hurt, or you're going to get burned. So reversal trading is probably not something that I would suggest. If you would like to know more about it, you can certainly look into it. Retracement trading, this is certainly a good one, particularly on the 4-hour time frames, using something like Fibonacci. So what you're doing is, retracement strategies are based on the idea that price won't move in a perfectly straight line. We definitely know that that is the case. Price does not move, with the exception of sometimes these little parabolic moves. What we might do is we'll go back a little bit. So here's a good example. Price doesn't move in a straight up and down fashion. It retraces, it moves up, it retraces, and continues moving up. So if everything moved up in a directly straight line or a directly downwards line, we'd all be filthy rich, because you could pick it every single time. So what retracement trading does is, if you had missed a move to the upside, for example, you missed this move, you saw price head to the upside, the last thing that you want to do is FOMO buy right at the very top. I'm sure we've all done that. I certainly have. Buy the top and you sell the bottom. How many times have we done that? So what you might like to do is, you might like to use something like for example, RSI, trend line, support, resistance, Fibonacci, steamroller, for example, to catch these retracement areas. So what we would do, especially using the Fibonacci retracement tool, if you want to know more about that, unitytradinggroup.com/Fibonacci is a whole video there. So what we might like to do is, if we know that we have missed a move off the 23, we know that our 61, our 50, our 38 are very important levels, not only psychologically, but for price action when it comes to the Fibonacci tool. So what we're looking to do is we are looking for when price hits the 50, for example, and we've missed the move, what we might look to do is we might look to set some cheeky buys. Flog that. Oh my goodness. We might like to set some cheeky buys down on the 38 in the hopes of catching the retracement so that we can set buys at the 38 and with the expectation that price will hit the 50 and either A, continue up towards the 61 because we've got little structure here. We might expect that to head back up towards the 78, or in fact, in this case, we know that we could A, set another buy down at the 38 with the anticipation of this happening as opposed to trading within this range. So you can take a little bit of inspiration from that by saying that there might be an established range here that we can trade. But on the flip side of that, we can also catch a few healthy retracements in the process. I can't even see where that wick ends. Give me 1 second here. So you might look for where those particular wicks end. So you would use, again, something like the steamroller indicator where you can catch the retracement. You can catch the support level. You can catch the retracement. You can catch the support level, and you can catch the retracements, and so on and so forth. So you may choose to do that on the 4-hour time frame. You may choose to do that on the daily time frame. But certainly using the Fibonacci tool or your RSI, trend lines, looking for strength, CCI, MACD, you are really spoiled for choice when it comes to trading these particular assets. You're going to find that these trading strategies and trader types, you will find are more respected on more liquid coins. BTC is the example I used here because, of course, it's the most liquid coin. So TA is more respected. If you are trading very low cap altcoins or coins that are prone to high levels of volatility, this stuff may not be respected as much. But if you stick to your top 10, top 15 market cap coins, you'll find that these strategies are far more respected and you are far more inclined to get relevant data to see if that suits your trader type. Well, I hope you enjoyed that. I know there's a quick breakdown, but we try not to make things too complicated here at UTG. If you have more questions, I encourage you to come into the Discord, leave a comment, like and subscribe, and show us your support, and we can continue to do things like this. We can do more deep dives into these strategies if you would like to see that. But in the meantime, head to unitytradinggroup.com, search Unity Trading Group Fibonacci, Unity Trading Group Moving Averages, Unity Trading Group MACD, all that good stuff. We have tons of video guides and stuff like this. But I really hope this helps to give you an understanding of the trader type that suits your lifestyle. Don't move your life around trading, move your trading around your life. And I really hope this gets you on the path to becoming the best trader that you can be. I'm Tex. Thank you so much for watching and your support. And we will see you very, very soon. Take care.